When I first started trading, I was really obsessed with win rate. I want to be able to increase my win rate to 80% to win a lot of my trades. That's all I focus my time on. These days, the win rate is such a small part of my trading. I don't really look at it too much. I don't really care about it. I can calculate it if I want to. I can look at it. But it's not part of the things I really look at and I really calculate or use. That's because the win rate doesn't really matter overall. In this video, I'll share with you why. I will go step by step through all of that. Not gonna get the right room set up today. It's the mess. I have some shadow here, which is not the best, but we have to deal with it sometimes when you're traveling. The rooms are not the best. It happens, even if you pay a lot of money for the room. So that's a fun thing. We can definitely dive into this in the future video. But let's talk for now here about win rate. Really, it's important to think about the win rate because everyone is obsessed about this. People ask me always, how many of your trades do you win? What's your percentage win rate? Or they go and say, oh, I want to be able to achieve an 80% or 85% win rate, and then I'll be successful and profitable. And in reality, you need none of this to be able to make money in trading. Because a focus on win rate can also make you do dumb stuff. It can make you try to cut your trades faster to get to having a profitable trade when you know your trade should run longer, or when you know you could keep it for longer in the market. Or it makes you want to go into trade with really big stop loss, try to make sure that you're going to win this trades and take profit a lot faster. And those things are not really good for proper trading. And I've really seen this firsthand. Traders who have a really high win rate and in the end still lose money. They don't lose money because they have a high win rate. They lose money because the win rate comes with a lot of shit that they cut short, or a lot of really small profits, or they're trying to really jump into trades that they shouldn't jump in because they want to have a high win rate. And they're willing to do everything to move the stop losses, to give the trade more room, to have it go back to break even or profit, to have a good win rate. They're trying not to take any losses, and that causes them to sometimes have these really big catastrophic losses that almost blow up their account. In the end, what matters is your expectancy, which is the combination of your win rate and your average win size. So how much do you win on average compared to your losses? If you have a very big average size to loss, meaning you have these big targets in your trades, if you win them a few times, you can have a profitable month or week or even a day in trading. If you target these small moves, of course your win rate should be higher, but if you target these bigger moves, then your win rate can be much lower. I know guys who win 20% of the time and make really good money in trading. There's some guys who win 70% and make even sometimes less money, or that are able to make the same money but with smaller targets. It's all about the ratio between these two things. So whenever you look at your stats, your trading journal, or any kind of summary on your account, look at your win rate, sure, but also look at your reward to risk ratio. How much do you win compared to your losses? And if you can, look at the profit factor. Profit factor is a good measure of your actual profit on a given dollar you invest in the market. It's telling you if you put $1, you're going to earn back, let's say $1.20 or $2 on average over time. Or maybe you put in $1 and then you earn like 90 cents. That's a problem because then you lose money on your trading. So these measures are better because they give you a good look at how actually you trade and not just how much you win or how often you win. They really give you a better measure of, is your trading profitable and how good is it? Michael did a video here in the corner about these metrics to look at. So profit factor is one of them. There's a few more you could dive into if you really want to be able to master your trading journal better and understand your metrics better. So check it out. It's going to be linked in the corner right here. Also link below. We'll try to put it below so that you can click on it and watch it later if you want to. It's more of an advanced topic, but I think if you want to really master this eventually and get good results in trading, you should watch it and take some notes. We're talking not just about profit factor, but what kind of profit factor you look at, what kind of measures are good or bad, and what's the sweet spot. Good to take a look at that. But the other thing I believe you should track beyond these metrics is really how much you risk per trade. Because it doesn't matter if you have a really good win rate. If you take too much risk per trade, that's going to kind of bite you back. That's going to make you have these big losses or these big drawdowns in the market. If you have a smaller risk per trade, then you can handle these drawdowns easily. And even a smaller win rate where you lose a lot will be fine because you're used to losing and these losses don't make a big deal on your account. It's just important to not just look at the win rate, not just even the profit factor, but also how much you risk per trade, how much you are going into drawdowns and how big these drawdowns are in the market. Because keep in mind that any big drawdown can kind of actually wipe you out of the market. It could be a time where you go in the market, you have a huge drawdown and you say, okay, man, I'm just done. I quit and I'm done with it. And these times where you are having these big drawdowns and you quit are not good for long-term trading success. So we want to try to minimize them by looking at the profit factor, of course, but also how much you risk per trade. Now, I've talked a lot about the theory here, but I want to give you an example of my strategies. I trade a bonjour universal strategy. And trading it live manually, I've never been able to go beyond, let's say, 52% win rate. That was my maximum. Where our goals now, I believe we're ranging around like 48% win rate with that strategy. That strategy is producing some good returns for us. It's growing our algo account quite well. It's part of our algo portfolio, but the win rate has never been really high. Why is that? Well, first of all, of course, because in algo, we cannot control all the factors. You have some filters there, but there's always things that the algo would take that we maybe will take manually because of discretion. And that's just part of it. It reduces the win rate. But the other thing is that strategy focuses on catching reversals. So it's kind of looking at the market from the sideways, trying to pick tops and bottoms. And these tops and bottom, you can put a lot of filters into it, a lot of things to look at, but they're always going to be not so reliable because the fact that the reversal, price could start to break out, price could show a reversal sign and then kind of go down a little bit, then come back up really fast. And it's never going to be fully reliable. We know if the trade work, we can probably ride it till the bottom of the range. We can have a really good reward to risk on this. Maybe a 2-to-1, maybe a 3-to-1, probably a good 2-to-1 on this. And that means that we can profit with even smaller win rates. You give me a 48% win rate with an average reward to risk of 2-to-1. I'll take it anytime. It's pretty good. It's a really good measure. And over time, that gives us a really good edge in the market. Now, is it the best edge ever out there for of all times? Probably, actually, definitely not. But it's a good edge that makes us money. Now, if you combine this with now other strategies of like, let's say a trend one or a breakout one, then you've got a really whole pack of different things that work in different markets and different conditions. And that's really where it's all at. It's okay if the reversal one loses a bit more often and if it makes less profit. But then you combine this with the trend one that will really crush it in trends and the one that will really cash breakouts early. And you've got a whole portfolio that works really well. So I'm really trying to push your perspective to long term here, really make you see that it's not all about, oh, how often the strategy wins or what's the percentage of winners on this, what's the win rate. There's a lot more things you can look at to really determine good trading, to really make us a good portfolio. And these things, you should really pay attention to them. Take a bigger perspective, look at things overall. Once you understand too that you don't have to win often to make money, you start to not care about what trades do. If they go in a loss, it's part of a loss. If it goes in profit, it's part of the few profit. That's totally fine. Now, I'm not saying you have to trade with a lower win rate strategy. Go with the high one if you have it, if you're happy with it. Your targets will be smaller. It's just part of it. And you can have the same good results both ways anyway. If you want to go in depth on the risk management and really the metrics you should track, Michael did a full training. It's going to be a link in the description below, the first link, where he goes over how to really put together a whole risk management that focuses on your trading and works for your goals. We talk about these metrics, of course. We talk about a lot more things. You want to pay attention to this, go watch it, take some notes. It's really powerful, 100% free. It's a pure value, stuff we usually only reserve for our students. So go check it out in the link below. And we'll catch you back here in the next video pretty soon. Ciao.